Thanks for joining us at XM.com for this Forex Preview video. We'll be having a look at UK data out this week and, of course, the outlook for the pound. I'm Cristina Marujos, and joining me today is investment analyst Cristina Barcenidou. Cristina, the pound had a constructive week thanks to the U.S. election, which has finally declared Joe Biden as the new president during the weekend. But a busy week looks to be beginning in the UK. And having a look first at data releases, we have employment readings for September coming out on Tuesday and GDP growth readings for the third quarter on Thursday. What should we expect, and how important will this data be for the pound?
Hi, Christina. Indeed, the U.S. election has been the main positive driver for riskier assets such as the British pound, because overall markets were pricing in a less certain trade environment in global markets following the risky trade policies former President Trump has been applying the past 4 years. Also, there was a growing scenario that Biden's more expansionary fiscal spending plans may elevate public debt levels, which is dollar negative and therefore pound positive. But that remains to be seen because neither party has full control of the Congress so far. So adjustments in policies could be a struggle for Democrats. Nevertheless, we now have more clarity about the U.S. election results, and any legal actions by Trump may not lead to any changes in the near term. So this week, the focus will turn back to the economic calendar, though in the UK, Brexit trade talks will be again the main driver for the pound, of course. So data releases may attract some attention, but those could be only informative and perhaps outdated, given that employment readings are for September and GDP growth numbers are for the third quarter. Under other circumstances, markets would closely look at the data, especially look at the GDP readings to see how large was the size of growth following the end of the first lockdown. But the economy is currently facing a second wave of infections, which is much bigger than the first one, and the government has already imposed a partial lockdown this last week. So that's expected to squeeze the economy in the fourth quarter. Currently, we expect a quarterly record GDP growth of 15.8% in the third quarter, but this might not excite markets because investors have started to price in that the economy will dive back to the negative area in the fourth quarter. Now, regarding the employment readings, the unemployment rate is forecast to rise to 4.8% in September, and probably this number could get even larger in the fourth quarter. So markets may not pay attention to this number either. Perhaps the claimant count for unemployment benefits for the month of October could be a more important number to look at, though this may not cause much volatility either. So as regards the data impact on the pound, I don't expect much movement. Perhaps it could be a short-lived volatility to the downside if the data disappoints significantly, but if they come in better than expected, I think that they will be largely overshadowed by negative sentiment.
And of course, speaking of Brexit, it's also on the agenda this week. How much progress have trade talks made so far?
Well, officials have been trying to keep markets optimistic that things are moving to the right direction, but the reality is that we still don't have any real evidence on that, and that suggests that the EU and the UK haven't solved the sticking points and divisions remain large to secure a trade agreement. We have a new deadline on November 19th when one of the regular EU summits will take place, and the sides should have something to provide, but this is a tight timeline to agree on a complicated trade deal, such as a Brexit trade deal that also needs to be done before the transition period ends in December. So talks are expected to be a tough battle this week, and the pound could turn to be more sensitive to Brexit headlines. But overall, current virus conditions suggest that neither side would like to have another problem next year that may further pressure its economy and call for more stimulus by the government central bank, which have recently released more liquidity in the UK. So there's still a hope that the EU and the UK will get this done in the next few months. So whether this will be an ideal agreement and another headache for the pound remains to be seen. If we don't have any solution, then that would be, of course, devastating for the pound.
Cristina, thank you for joining me today. And of course, thank you for watching this Forex Preview here at XM.com on UK data out this week and the pound.